Hello everyone and welcome to this latest installment in our Masterclass series. This one's looking at stock control and it'll touch on a few things that we've had a bit of a look at in terms of there have been a couple other stock related masterclasses so far. And yeah, so there will be a little bit of a crossover, but this is specifically looking at controlling the stock in terms of the behavior of the stock within the system and the different things that you can do to basically make the stock behave the way that you want it to. Of course, like a lot of things, like even with your physical computer, there's nothing in the manufacturing process that stops you from getting a sledgehammer and smashing the system. Likewise with software, we put some guardrails in place, but if you really want to make a mess of things, you can do so. So what we're trying to do in this masterclass is just teaching you the best way to color between the lines and control your stock as best as possible in the system. So in terms of what we're covering, we're going to have a look at a few general controls in a scenario sense that control your stock item behavior. We'll look at some new attributes that have been introduced in Sybiz Vision 2510, and indeed we are discussing the software in the context of version 2510. So if you are on an older version, some of these things you may not have in your system. So just bear that in mind. If you want to try something out and you're not on the latest version, you may need to have a good think about upgrading. And we're going to have a look at the intra-ledger transactions, so the transactions within the stock ledger itself. Obviously, there's a bunch of transactions in the other ledgers that interact with stock, such as your sales and purchasing. We will touch on that a little bit as well, and also have a look at various other control concepts. And a lot of these have sort of evolved over time, so there may be certain things that you're doing in your organisation, and one of the key takeaways of this session is it gives you the opportunity just to revisit what you're doing in the context of the completeness of what's in the software at this point in time. So you may have been on autopilot, you have your systems and processes in place, they're working well for you, but they could be working better if you incorporate some of the things that we're covering in this session today. As I said, there is a little bit of an overlap in terms of some of the masterclasses that we've had previously, so we will have a little bit of a look at the pricing and costs just at the end of the session, just because it does sort of fit under this banner as well, and so on and so forth. So let's just start with our normal disclaimer. We're not going to be telling you what to do within your organisation. We are software developers, not your accountants or your advisors. So seek the professional advice from those people that are advising you in those capacities. So we're just going to give you some ideas, some food for thought as to what you do with that really needs to be taken in the context of your own organisation, which we don't know the inner workings of, so we can't give you hard and fast advice as to this is what you must be doing. And as I mentioned in the previous slide, you may not have some of these features within your version of the software. We are looking at version 2510. Some things I will point out that have been added relatively recently, but others may have been added 12, 18 months ago, and I won't necessarily point out what version certain things have been added as we go, but just bear in mind that we are looking at the latest version, which is 2510. Okay, so just on to the first part of this presentation. We should hopefully be done in about 50 minutes in total, but we may take the full hour, but we'll try to make sure we don't go beyond the hour. So the first session is just having a look at some scenario-based item controls, and we'll just dive straight into that. And yeah, so various scenarios, won't worry about summarizing them here. We'll just dive straight into it. And so from a stock behavior control point of view, it is really up to you to put the processes in place. And generally what we recommend is to start with some tight controls and only loosen them temporarily for exceptions. So yeah, from an accounting perspective, it is best to sort of, when you are dishing out sort of user rights or setting up your stock, just tighten things more than you perhaps need to. And then if there are reasons to loosen those controls, and if possible, just do that on a temporary basis. And it is best to set each product up correctly from the outset. We will talk a little bit about whether if you want to make some significant changes to the behavior of a product after it's been in the wild for a little while. There are some things that you can do to make those changes, but we would recommend that you do set the products up the correct way from the outset. We do see quite often customers basically saying, okay, there's a particular product that we've had as a non-diminishing product for 4 years. We've now decided that we want to track it and have it as a diminishing product, but we want to keep the same product code itself because we've got some history. Yeah, so it's quite a significant change for a stock item to have happened sort of midway through the life of that stock item. So we kind of recommend that you avoid those kind of situations, but we will talk about how to deal with them if they do come up. Obviously, there's always exceptions, and we acknowledge that. And the consequences of lack of controls, we see sometimes products are sold at a loss, and we'll talk about that through the scenarios as well. If you don't cost your stock accurately, or if you go into or allow your stock to go into negative stock levels, that has ramifications for the accuracy of the costing of your stock, particularly when you are in that negative stock setting. And it does some quirky things with good reasoning as you come back through the zero quantity, zero value back through to positive stock. And we'll talk a little bit about that as well. Tracking, so your serial and lot numbers, that can get out of sync if you don't have the correct controls in place. Overstocking is something that we see quite a bit of as well. Yeah, incomplete orders are not dealt with. So if you don't manage your orders effectively, then it is possible to just let them sort of live in limbo land forever and a day. So there are some good techniques that can be employed to avoid those lack of controls. Okay, so this is just taking you through a scenario of some of the controls that you have at your disposal if an item is being phased out. So what we don't want to do is basically make it inactive, because you may still have some stock in hand of that particular item, and you of course want to sell that before you make the item inactive. So we still want to sell the item, but we want to stop additional purchase orders being placed. So there is a little flag on the purchases tab of your items called stop purchase orders. And so you can check that box. And so that will allow, if you do have some purchase orders that haven't been fulfilled yet, that will still allow those orders to be completed in terms of the delivery and invoice, but it'll stop your team from raising additional purchase orders against that particular stock item. Once the final purchasing has been completed, you can uncheck the allow purchases on the main tab of the item maintenance, and that will prevent any purchase transactions from being placed against that particular item. And you can also set a replacement product. So those tools are at your disposal, so you don't need to manually manage this process. You can use the software to assist in that process. When an item is serial tracked, we often see the controls not being as tight as possible. And with things like serial tracking, lot tracking, and some of your more funkier costing methods like FIFO or serial costing, we do recommend that you keep things as tight as possible. It is these things can be fairly unforgiving if you colour outside the lines, and so we do suggest that you keep things as tight as possible. So just on this graphic here, in the context of a serial tracked item, these are the settings that we recommend. So don't allow negative stock of a serial tracked item. Make sure it's diminishing. You are able to do non-diminishing tracked items, but this is just in the context of a diminishing item. You want to track it in and out. It is possible to do one or the other and not both, but we recommend that you do it both ways. Unless there's a very good reason not to do that. Obviously, if you're assigning serial numbers on the way out the door for something that didn't have a serial number on the way in, that's an exception. And then we recommend that you do not allow duplicates and do not allow the number tracking generation at dispatch unless those things are absolutely necessary. And hopefully that's only a temporary requirement. If you do things like allow duplicates and allow tracking number at dispatch, then you can get into a situation where you do have a situation where you have more serial numbers on hand than you do of the actual item, and it takes a little bit of gymnastics to get yourself out of that situation as well. And yeah, so that's basically the recommendations for serial track products. And I should just point out the allow tracking number generation at dispatch. That's something that's only been added in a recent version. So that's, I think, only about 12 months old. So that might be something to revisit if you have had issues managing your serial numbers in the past. And just another thing that's been added recently as well is there is the update tracking buttons that you have available to you now for your serial and lot tracking. So the scenario is there was a data entry mistake when the items were purchased in. There's a slight difference in the serial number. If that serial number is still in stock and you want to update it, you can do that by specifying the original incorrect serial number and then specifying the new serial number, and then that will update the records associated with that item rather than having to do a return or whatever else to get back to the situation of having the correct serial numbers. You can use the update tracking mechanism that has been added to the software recently as well. Okay, the third scenario is an item that goes into negative and is replenished. And again, as an accountant, we hate this. It shouldn't happen. You know, theoretically, there's no such thing as negative stock. But the reality in the world is that there are certain circumstances where this is one of those necessary evils. So the typical scenario is the goods have arrived physically onto the shop floor. The person who processes the purchasing isn't able to do the inward delivery at the point in time. You've got one of your most important customers that's rocked up. They want to buy that widget that's just been delivered. It's not in your system, so you can turn on allow negative stock, which will allow you to sell that item prior to the purchase being processed in. So obviously those set of circumstances can give rise to undesired outcomes, but it's up to you at the end of the day whether you wish to do that within your organization. And again, it should only be used in those exceptions. And yeah, a couple important things about it is when you are in negative stock, because the system doesn't know what the actual cost of the item is, it will use the last cost of the item. And so it's quite important that if you have, say, not purchased that item for a number of years, that last cost could be incredibly stale. So you need to be mindful of keeping those last costs up to date if you do allow your stock to go into negative. And you can get some funky values and postings occur when returning to positive. The example that we've given here is yeah, essentially your average cost before you go into negative is $10. Your last cost was $5. But then when you go to repurchase it, it's actually $20 per unit. So through that situation where you start with one on hand at an average cost of 10, you allow the negative stock. If you sell two of them, it's going to say that your quantity on hand is -1 at a cost of -5 because your last cost is -5. Again, this is a slightly contrived situation because it's unusual that you would have a last cost of $5 and an average cost of 10, but just to illustrate the actual process. When you replenish that stock, so you buy two in at $20 each, which is the new cost, then you're going to end up with a quantity on hand of 1 and a cost of 10. So sorry, a cost of 20. So it remains true that your positive again stock is going to reflect the correct value of that item. So what will happen there is you'll have a stock posting of only $25 because you're going from -5 to +20. And so you've effectively lost $15 throughout that series of transactions. So that's just a little bit of a warning as to the consequences that can occur if you do allow your stock to go into negative. So things you can do to avoid that is if you know that's going to happen and you know the actual cost of replenishment before you allow the negative, then you can just update the last cost of the item and go from there. So that's that scenario there. And I should just point out you can only change the last cost of the item if there's none in stock for diminishing items. So yeah, a bit of a a difficult one to get your minds around there, and hopefully you'll see why we only recommend the allow negative stock happens on the rare occasion. The next scenario we'll look at is another common one where an item is stocked, but it's not stocked, but you source it upon the order. So it is something that you can get from your suppliers, but it's a slow-moving item. Sometimes they're quite large cost, so you don't want to sort of tie up your working capital with an item that you might not sell that frequently, but you have customers that occasionally want to buy this. So in this sense, we're looking at an assumption of the item hasn't been purchased for 3 years and there's no supplier special price, which we'll talk about a little bit later as well. And it cost you $100 last time. So yeah, you get a customer that now wants to buy one of these things. You process their sales order, and your pricing is based on that previous cost. So you're selling it for $130. And then you have a situation where, like the previous scenario, where the item gets purchased, it actually arrives, but the purchase delivery doesn't get processed before the sale is completed. So you basically sell that item. The cost is $100 based on the last time it was purchased. So your profit margin at that point in time is a reasonable $30. But then when the purchase is completed, the new actual cost of $135, a net loss of $5 has occurred. And through that sequence of transactions, the horse has already bolted. You can't go, you might be able to try it, but you probably wouldn't have any luck going back to your customer and saying, hey, look, that thing that we just sold you for $130 actually cost us $135. So we want to get another 40, 50 bucks out of you so we can make some money. That's not how the real world works. So again, this is something that you can control with supplier special prices, which I guess is a little bit of a misnomer in terms of the way we look at the supplier special prices is it's more like your supplier price list. So if you are in that situation where you have a few thousand items that you regularly stock, but you may have access to tens of thousands of additional items from your suppliers that you don't stock, but you can purchase them in when demand arises, then we recommend importing your supplier price list into supplier special prices to avoid the situation that we've just covered in that scenario. So we see this quite a lot where this series of things happen where a slow-moving stock item, high value, gets the occasional sales order, the sales completed before the purchase is transacted into the system, and the company loses money as a result. So just having a look at now some new properties on products that have been recently added as well. So there's a new attributes tab, and that contains a lot of information. I guess the rationale behind this is it's making it easy for those of you that are integrating with e-commerce sites to store some of the attributes that are typically pushed up to an e-commerce site. And you may already have custom fields that are housing some or all of this information. If you are looking to use these native fields going forward, just bear in mind that there can be situations where you need to be mindful of how your existing e-commerce sites are fetching the information. So it's not just a matter of going, okay, I'm going to kill off these custom fields and whack all the equivalent information into the new fields that we have, because that's probably going to break your e-commerce sites. So just do any of these changes in conjunction with people that assist you with your e-commerce sites. And you can use the export and import features to relocate that data into these new fields as well. So they're all reasonably self-explanatory. Some of them may be relevant, some may not, but yeah, they are essentially just attributes that can be used on your e-commerce sites. And there's an addition to that as well in terms of some additional product descriptions are available to you. Again, this is for your e-commerce sites, so it's just giving you more of a narrative than you'd be able to get through the process of just the normal description and extended description for the products themselves. So they have been added, and they're just under the main ribbon of the product maintenance in the product descriptions area. So you've got a short product description and a product description, aka a long product description, that are at your disposal there. Okay, now we're just going to have a look at some transaction controls in those transactions that are generally wholly and solely within the inventory ledger. So just before we do that, we'll have a look at the defaults that are available to you in inventory. And I guess specifically from a stock control point of view, you have the ability to have warnings displayed when you're moving into negative stock, or you're entering a order quantity in excess of the stock on hand. So that's up to you as to whether you want those warning icons to present in those circumstances. And you also have price position controls independently on the sales and purchase side of things. So you might want to have your sales prices shown in 2 decimal places, but you actually purchase stock in 4 decimal places, or vice versa. That is available to you as well. And so again, that's those things translate through to your stock controls. Okay, from a stock take perspective, there have been a number of changes made recently here that makes it easier to process your stock take. So just in terms of some of the general rules of thumb, it's a good idea to limit the amount of time between when the physical count and data entry of that count occurred. You don't have to stop data entry occurring because there is some sensitivity as to the batch numbers. So the system will basically look at what's been transacted between the physical stock take occurring, or the batch number that was present at the time of the physical stock take, and the actual data entry. So it will make some adjustments as required based on the transactions that have occurred between those 2 points in time. Obviously, things like serial tracking throw a bit of a curveball into that, because it's not really possible to count 5 widgets and have their 5 serial numbers and then 2 of those get sold. It gets too confusing for the system to work out what's going on. So we do recommend that you stock take your tracked items separately and in batches, and we've made that easier with the tracking options now. You have the ability to do stock takes for your non-tracked products only, serial not tracked products only, serial tracked products only, etc., etc. And yeah, based on your product selection as well. So you could yeah, have even finer grain control over your stock takes based on the filters above those tracking settings as well. So and yeah, if you can use the export import if practical, we'll show that in a moment as well. And the Vision Stock app also supports non-tracked items in a stock take setting as well. So so we've made some decent improvements there. So when you're creating your stock takes, as we had a look at the previous slide, you do have those tracking options now. Below that in the screen grab, which was obscured, was the options to include and exclude products, which have also been something that's also been added recently, where you have the ability to include inactive. Ideally, you should have processes in place before you make a product inactive that it has a 0 quantity on hand. And then you also have the ability to choose whether you want to include products with 0 quantity on hand or not. Yeah, chances are if the system thinks you've got 0 on hand, you do have 0 on hand. And then the other thing that we've added as well is to include products with no transactions since the last stock take. So you could exclude those if the stock hasn't moved. Obviously, you probably wouldn't want to do this every single stock take, because stuff could be walking out the door without your knowledge. So, and obviously you wouldn't want to recommend this for high priced items either. But if you have a lot of low price items and they haven't moved since the last stock take, you may be safe in the assumption that the stock count is the same as it was last time. And again, that's something for you to decide in consultation with your advisors as to what that's all about. We'll give you a copy of these slides. There's some links throughout these slides to some of the clips that are either previous masterclasses or little YouTube clips that give you an overview of some of that new functionality. And just a few more bits and pieces about stock take. we have also changed it now so that the quantity column is blank. It used to be 0 if you hadn't touched it. And the problem therein was that it was difficult to distinguish between items that are being counted at 0 versus items that hadn't been counted, even though there's a counted flag as well. It just got pretty hard to manage. We've also got the update lines function as well. So obviously you can only count what you've got. So if you did have a stock sheet that you only had recorded on there items that had a quantity that could be counted, and you assume that everything else is 0. If it hasn't been given a quantity, you can use the mark all as counted, and that will set those blank ones to 0 and flag them as counted as well, and so on and so forth with those other update lines. Do other little bits and pieces for you as well. And as I said, you do have the ability to export and then import via a spreadsheet. So from a data entry perspective, sometimes spreadsheets are easier. So to do that, you go to the utilities and you go to export lines, as opposed to lines layout that will just give you a blank sheet. But export lines will give you a spreadsheet with all of the items that are in the stock take that you're actually in at the moment. So it'll match basically what's on the screen in terms of the items that are presented within that spreadsheet. Then you can just merely enter your accounts into the spreadsheet and then come back and use the import lines once you're ready to import that information. So good little time saver there. Okay, on to transfers, and we have recently added transfer orders. So generally, stock transfers are intended to transfer stock from one location to another. They can be used for other things as well in terms of jobs and service. We will talk about the transfer orders more in the next slide, but that gives you the option to stagger the process and also use an in-transit location if that's something that you want to do. One of the advantages of the transfer orders is sometimes if you go to do a transfer and not everything's available, you can only process what you can process, and anything that can't be transferred will basically go into the ether. There'll be no record of it. So if you're in that situation where someone is requesting a transfer from another location to a location, then a transfer order can help the anything that hasn't been able to be transferred, that will stay alive on the transfer order for future transfers when that stock becomes available for transfer. So that's another advantage to the transfer orders. As I said, transfers can also be used for job costing and service to and from. And we have another funky thing, which again, as an accountant, makes me shudder, but there are reasons for it. This is the concept of an elsewhere location, which is a virtual location. So that serves a similar purpose to quantity adjustments through stock take, and we do recommend that you only use it in exceptional circumstances. So sometimes, for whatever reason, the system will say that there's none on hand, but a customer's brought it up to the counter, and of course you can't tell them that there's none in stock when they have one in their hand that they've just grabbed off your shelf. So if you urgently need to complete that sale, then you can do a transfer from elsewhere and then worry about what's actually happened behind the scenes. So it may have been something that went walkabout when the stock take had occurred and wasn't where it should have been, and so it's been stock take to 0. So yeah, the idea is that you'll do shoot first and ask questions later in terms of the reasons for that circumstance to exist. And as we said, we've introduced transfer orders recently. So the process flow is generally a transfer order is initiated as a request for stock transfer. It could be the flip side of that, saying this is what we are going to be transferring you. So it's dictating that's what's being transferred to a location. But generally it is a request for items to be transferred to another location. So you initiate that with the transfer order. And the transfer orders from one location to another single location or a job or a service request. So that is something that differentiates them from the normal stock transfer, which are able to transfer items to and from many locations. The transfer orders are set to be from one location to another single location. Once they're ready, you can use the dispatch order, and if you're not using an in-transit location, that will complete the process, assuming that everything has been able to be transferred at that point in time. Anything that can't be transferred will remain on that transfer order for future transfers as well. And if you are using the in-transit location, then the receipt order transaction is used, and you also have the option to reverse the dispatch if it was done in error, and you can also handle shortfalls. So if it's the situation where the transfer order can't be completed in full, but you don't want to keep it alive, you can handle those shortfalls as part of that receipting process as well. And again, there's another little YouTube link there as well. Sales picks is something that not as many people use as perhaps should. So this isn't just a derivation of your sales order that looks like a picking slip and you just tick and flick. This is a separate process within that sales order fulfillment series of transactions. It's also available in the Vision Stock app. So where you'd be looking to use the pick and pack process is where you have orders that are for lots of items, or you have multiple people that are involved in the process of getting stuff ready for dispatch, or the orders are progressively ready for dispatch as the items come in to fill that order. Or you have people that are running around various parts of the warehouse and picking the items for multiple orders. So there's a lot of different use cases there. Yeah, so, and they can be sort of used interchangeably as well. And it is an optional process, so you don't have to do it. But if you do want to do it, so you might be sitting there having a look at your system at the moment and the sales pick stuff's grayed out, you do need to activate it. It's not an optional module. If you do have the order entry modules, you'll have the sales picks as well, but you do need to turn it on. The reason for that is that if it's not something that is necessary for your organization, we don't want to get in your face with all this sales pick stuff that means nothing. So that's why it does need to be activated. And yeah, so each sales order line can be subject of only one active sales pick at a time. So this is something that does cause a little bit of confusion for those that are using the sales pick process. So just in the context of a scenario, if you have an order that is placed for a quantity of 10 and you generate a pick for a quantity of 10, and let's just say that there's only 8 in stock that the store person's able to grab at that point in time, then if they process that pick, then what will happen is another pick will need to be generated to pick up the remaining quantity of 2. So that's just a little thing to just keep in mind with the sales pick process. Stock allocation is another pretty cool thing as well, which allows stock to be reserved against specific transaction lines. So what that does is that even though that stock is on hand, it will reduce the quantity able to be sold in other transactions because it's been essentially reserved against sales orders that are in process. And so where this comes in handy is if you have priority customers that you want to make sure that they get the stock as a priority compared to other people that may be placing additional orders, then you can manage that process. And basically the stock allocation, as you're processing transactions, you can allocate that stock, but then there is also the helicopter view of it where you can go to inventory, transaction management, stock allocation. That allows you to review the allocations and reassign those allocations, and then set or change reserve dates for those allocations as well. So there's quite a bit you can do with that. And also on a supplier side of things, you can set a default to allow auto allocate on suggest orders. So if you're using the suggest order process, and that's been covered in another masterclass webinar, you can set it to auto allocate based on your rules and priorities, etc. And if you are using back-to-back orders, the allocation process is inherent to that, which of course makes sense because that's the reason you're ordering that stock in the first place. So that's just a little by the by. Stock journals, another recent addition, and these are for value-based adjustments only, so not your quantity. And so if you wanted to do this previously, you'd have to do some funky things through stock take, which is a little counterintuitive. It still did what was required at the end of the day, but now having a separate transaction specifically for that purpose makes a lot more sense and provides better analysis because it's actually a different transaction type as well. So when you're reviewing the history of an inventory item, the stock journal is now distinguishable from stock take value adjustments. Okie dokie, and we'll fly through this next section, just having a look at some other control concepts beyond just the stock ledger itself. And again, there's been another masterclass on this, the management grids, as we call them, for inventory sales and purchases. They are in other ledgers as well, but in the context of this webinar, these are the ones that make sense. And essentially, if you're not using these, then you're don't mean to be rude, you're not being as efficient as you could be in your organization. So there's definite time savings to be gained by using these particular grids. So again, won't go into it because it has been covered in a separate masterclass. Another thing that causes a little bit of confusion as well in the inventory history in the inquiry screen, there's a stock value and a value column. And most of the time they are going to be the same, but there are occasions where they will differ. And so just while we have you, we thought we'd explain why they would differ. If an item's returning from negative stock to positive and there is a difference in the value between the replenishment cost and the last cost, then you will get a difference. If an item is using standard cost and the cost of acquiring that item in a transaction is different to the standard cost, you will get a difference. If it's non-diminishing, the stock value will always be zero, so there's no stock postings that occur for non-diminishing items, and landed costs also lead to a difference between the stock value and the value as well. Bins is another thing that is quite a bit of a hot topic, and yeah, so essentially bins can be assigned to products locations. So different locations can have different bins, and it is something that if you're not using them and you want to use them, you should have a good planning session involving your business partners as to the best approach for your organization. So items can have no bins associated with them, one or many, and bins can be literal bins that stuff is stored in. They could be containers, they could be locations on shelves, they could be aisles within a warehouse or aisles on a shop floor. There's different notions as to what they can be. They're very flexible, and as a result of their flexibility, they're not overly strict. So you do need to have some pretty good planning as to how you're going to be using them before you start using them. And essentially, in the way they're implemented within Sybiz Vision, is they serve to identify where items may be stored. But if they're, say, relocated from that bin to another bin, that there's no discrete transaction that says that has occurred. So they're just serving suggestions, if you like, in the recipe sense. So they're just giving you that indication as to where that item may be. As I said, there is flexibility. We've taken a flexibility approach rather than a strict approach. So that means that you do need to implement some controls. So, yeah, so if you do have a situation where you do have multiple bins assigned to a product, then what that's essentially saying to you is if you don't find the widgets in bin A, check bin B. If they're not there, check bin C. And then if they're not there, good luck. They could be anywhere. And yeah, as I said, don't just hit and hope. Plan the best approach for your organization. And you can also maintain those bins via the product location export and import. The other thing to point out as well is that the bins are created sort of spontaneously. So as you add them to the locations for the items, there's no lookup list per se. And if you do have multiple bins, you do a semicolon delimiter to separate the bins for that one item. So that's a little bit on bins. Just a final point on bins. Sometimes people say, oh, we really want a strict bin system that makes us change or do a transaction every time we want to move items from one bin to another. And there are use cases for that. And typically what happens is you say to them, well, if you're not using lot tracking for your items at the moment, perhaps turn lot tracking on for a couple of your items that you want to control better. And then you can basically do stock transfers between lots that will represent the bins in a strict sense. And more often than not, they go, yeah, that's in the too hard basket. We don't want strict bins after all. Yeah, so that's just a little bit of a reality check on that strict binning process. Suggest purchase orders also covered in a previous masterclass, and this is something we could spend 3 days on and still not scratch the surface in terms of all the combinations and permutations. But again, this is something that yeah, if you're not using it, you should at least have a look at using it, and it gives you the ability to help automate the replenishment of stock. Individual items, there are some behavior controls that you can place on individual items. So the 3 options that you have are standard, sales only, and ignore. Ignores the easy one. It just says, okay, we don't want to take this item into consideration in the suggest order situation. And sales only basically ignores the use of the item through other things such as manufacturing, and standard is basically looking at the use of that item throughout the system and then suggesting how much you should reorder based on its use throughout the system. So again, the purpose of this slide was just to point out that you do have controls at the individual item basis, and just make you aware of the suggested purchase orders, which was covered in a previous masterclass. Back-to-back ordering, this basically automates the process of purchasing something upon a sales order being placed. And again, you've got the individual controls on the individual items as to how that item behaves from a back-to-back orders point of view. So on the purchases tab of your items, you have the ability to designate whether it's something that you never want to do a back-to-back order for, or you always want to do a back-to-back order for. So that it would typically be something that you can order from your suppliers, but you don't stock until you get a order placed on you by one of your customers. And then when out of stock is pretty much what it says on the box there, that when the items run out, definitely do a back-to-back order. But if you've got plenty of stock, why would you bother ordering any more? So that control is there for you. And there's some debtor defaults. Again, this is something that doesn't happen out of the box. You need to say that you want to use it by going to back-to-back ordering and saying that you're using it, and then set the various parameters accordingly. So you can have a situation where it actually automatically produces the purchase order documents. You can set them to save only. So if quite typically what happens is if you're going to be placing an order on a supplier, rather than do it for one particular item, you might want to review that saved order at the end of the day and think, okay, well, we'll order some other things that we're running low on as part of this order as well. So that option is available for you, or it could be processed directly through to your supplier. Typically that happens if there are related companies within the group. So there's a bit of flexibility there as to how you use back-to-back ordering. So again, this is just an awareness to let you know that it's there rather than a deep dive as such. Landed cost is another thing just to take you through as well. So this is where there are additional costs incurred as part of getting the stock into your organization. So typically this is not always the case, but there's an importation of goods, and so you need to basically pay other charges, etc., before the items will be released. And then you have the ability within the system to control the way those costs are apportioned among the items that are subject to that particular delivery. So there's just a little table down the bottom there, just where we're buying 10, 20, 30 and 40 of various items at different costs and weights. And then depending on which way you determine the calculation method, the actual amount that's attributed to the various products varies depending on the particular method that you're using. So I won't go into any detail there. You can just sort of get the gist that if you use different calculation methods, the actual amounts that will be attributed to the various products will differ based on those methods. Non-diminishing products. These are pretty useful in for things like miscellaneous charges, for freight and services.
And even though non-diminishing products are a little bit funky, I'm actually a fan of them as an accountant. I'd much rather use these than clutter up my general ledger with unnecessary accounts. I'd prefer to do my inventory reporting in the inventory ledger rather than the general ledger. So even though they're counterintuitive, I actually quite like these. And even though you're using quantities, there are no balances that are maintained. So there's no quantity or value stock postings that occur when you're using non-diminishing products. And you can attribute a nominal cost. So in the case of freight, for example, if you're going to charge $15 for freight and it's going to cost you $12, you can whack $12 in to the when you allow unit cost changes, and then that way when you do your inventory ledger reporting, it will give you better profitability metrics than if you had a zero cost, which is the natural cost for a non-diminishing item. But you can specify a standard cost as well. So there's a little bit of flexibility as to how you work with costs and non-diminishing products. But just bear in mind that those are essentially pseudo costs used for reporting purposes only, rather than actually being posted as costs within the system. Okay, we mentioned at the start that it is a good idea to make sure that when you are setting up your products that you have a good think about it and set them up correctly in the first place, but there are exceptions, we understand that. And so if you are going to be making a significant change to the behavior of an existing product, we do recommend that you consider creating a new product in those cases and retiring the old product, but there are reasons why you want to keep that product alive and make the changes. So if you do need to make those changes, it is possible, but what you need to do is essentially get that product to zero quantity, zero value in every single location before making those changes. Not everything can be changed, but there are certain things that can be changed. Yeah, so essentially it is a fairly meaty process, especially if you do have multiple locations and you're stocking the item in those locations. You need to stock take everything to zero and then make a note of it so you can stock take it back to the correct quantities and values once you've finished changing whatever it is you want to change on that product. Non-diminishing products can also be changed if you wanted to change them to diminishing. So essentially what happens here is generally, not always, but generally non-diminishing products are sold only. So as if over the course of 5 years you've sold 30 of the items, non-diminishing items, then what you need to do is do like a little purchase of 30 of the items. You can't do a transfer because they're non-diminishing, so you need to purchase them in so that you have a situation where your net movement for that item is zero because you've sold 30 over the 5 years and you're doing this little internal purchase for 30 of the items to make the net history of the item be zero, and that needs to be done for each location. So it's a little bit confusing because sometimes these things will be grayed out and you go, I want to change this, but you can't because it's grayed out. Then you can, in most cases, make those changes only when you're at zero quantity and value in every location. A couple other things at your disposal for monitoring, maintaining, and updating your information. You've got a whole heap of dashboards available within the system, and yeah, when we visit customers and show them the dashboards that have been there for years, it's the first time they've seen it. So if nothing else, when this session's over, have a look at your dashboards. You've got, from a stock perspective, you've got them for performance, position, and sales, and you also have custom dashboards. So if there's another take on your inventory that you'd like to have in a dashboard sense, you can do that with the custom dashboards as well. And I should just mention the custom dashboards are part of the customizations module, which most customers have. But the dashboards themselves out of the box for performance, position, and sales, they are included as part of the base package. There's also the application log under the administration tab, which gives you the ability, if something happens, so if something starts behaving a little bit silly, and you want to know, okay, who's been meddling in that part of the software, then you can see via the application log who's been doing or rather who's been interacting with what and when, not so much who's been doing what, because the application log is fairly high level. It doesn't tell you what has changed. The change log module gives you the ability to get the specifics as to what has changed. So you'll be able to get that complete story of who did it, when they did it, and what they did. So that's pretty handy. Obviously, you'd want good security in place so that people that don't know what they're doing, not doing these things in the first place. But yeah, the real world is the real world. Some people, so yeah, sometimes you do need to give people more security than they perhaps really need. And you can also make some updates via the mass update wizard. You've got the export and import in various, not only the products themselves, but secondary attributes like things like the product barcodes and product locations, product suppliers can be handled via export and import. There is also a relatively new mass delete process as well. So if you say, okay, we don't want this particular price list anymore, this price scale anymore, but we've got all these thousands of products that have got a price for that price scale. So when we try and delete the price scale, the computer says no, because it's linked, that price scale is linked to all these products. The mass delete process makes light work of getting rid of those product prices. For example, there are other secondary attributes that can be deleted as well. And the customizations module gives you the ability to really have specific views of your data for your exact requirements in your organization. So you can control and monitor, you can use conditional formatting, so color coding if you like, for various bits of information, and the sky's the limit as to what you want to do there. Again, as with everything else, have a think about what you're doing before you do it, and that way, yeah, quite often we see people have so many different custom grids, and a lot of them are doing the same thing. So if you have a good planning session before you actually roll them out, you can have one grid that serves multiple purposes. And there's also the breakpoints module as well. So if you've got certain rules within your organization when you're creating new stock items or modifying stock items, then the breakpoints module can help constrain that data entry to your exact requirements. So it could be you might have a mandated custom field, for example, or it might be a free form, but it needs to comply to certain requirements. Then breakpoints can be used for that purpose as well. Okay, and just rounding out the last bit of the session is just a little bit of a recap on cost and pricing controls. We did have a separate session on this previously, so this is just very high level, just because it does make sense to sort of touch on this in the context of the controls around your stock. And yeah, the link to the previous masterclass is there as well, and these slides will be provided. Okie doke. So just this is just a little bit of a chalk and talk on how we determine the cost of an item when purchasing. So if there's a supplier special price or a supplier price list, as I prefer to call them, then that is what's used in all the cases. So again, by getting your price list from your suppliers and maintaining them, keeping them updated, you can have date-based controls on these as well, which will help remind you when you do need to ask for a new price list from your supplier. If they're not proactive in providing that to you, you can just do an import to update those prices. But if a supplier price doesn't exist, supplier special price doesn't exist, then the cost from the last purchase from that supplier for that location will be used. So that's something just to be wary of as well. If it is, again, a slow moving item, you haven't purchased a grand piano for 3 years, chances are that cost is stale. So if you had the supplier's price list, that's going to be a lot more accurate than the cost of that item from 3 years ago into that same location from that same supplier. If that combination doesn't exist, it'll use the last cost from that location. So yeah, if that's 0, then it'll use the last cost from the item itself. But if that last cost is 0, then it will use 0 as the purchase cost. Of course, you've got the ability to overtype the cost with the actual cost. So quite often, if you do have a high value, slow moving item, there's no harm in when an order is placed on you and you need to now place this on your supplier, looking up that price on the supplier cost on the website, or giving them a call to accurately cost your purchase transactions from the get-go. So yeah, avoid stale prices at all costs. And yeah, just we do recommend the use of the supplier special prices, aka supplier price list. And yeah, it's always a good idea to avoid having a last cost of zero, because you can get into a situation, as we said before, if you have a rather if you have zero stock, and so the first thing you do with the new item is you sell it into negative because you've allowed negative. If you haven't specified a last cost, it's going to use zero. It'll give you a warning, of course, but yeah, it can get yourself into all sorts of strife if you don't think about these things. Another point on last cost as well is if you have manufactured items that you also purchase on occasion, or you can purchase, but you predominantly manufacture them, generally, because a manufactured item, because that's not purchased in the ordinary sense of things, it'll have a last cost of zero. So when you go to purchase it, it's going to have a last cost of zero. So just be mindful of that as well, if you do have those items that you manufacture or you can also source from a supplier. And how Vision determines the price when selling: if there's a contract price, it will use that unless you flag the contract price to consider special prices, in which case if the special price is better than the contract price, the special price will be used. But if you don't have a contract price, it will use the best special price. So you could have multiple special prices for that combination of customer and item. The system will determine what is the best price among those competing special prices and use that. And of course, if you don't have a special price, it can't use that. So it'll then look at the relevant price scale price for that item. So there are certain transactions and templates that you can say, we want to always use the template prices, for example. So it doesn't matter what the special price is or the contract price or anything else, it will use the price dictated by that template or that transaction if you've told the system to do that. And yeah, make sure you set prices. So quite often, because the price scale that's used by the system is determined by the price scale attributed to the customer. If you have a situation where a customer has, say, price scale X, but the item that you're selling doesn't have a price against price scale X, then the system will default to a zero price with a warning. So again, if you've got your best practices in place, you shouldn't have those situations, but you can get into a bit of strife. If you're on autopilot and you ignore the warning, you're going to sell the item for zero price. And in terms of price controls, you do have quite a lot at your disposal. So you've got the price scales, they can be maintained via export import. You also have the price scale update wizard. That gives you some flexibility there. If you're wanting to do things like, rounding high value items to the nearest $5 or $10, then you're probably going to want to export, make your changes in Excel using the functions within Excel to get you the rounding that you so wish, and then import those prices back. But if you're doing B2B sales and you don't need to have nice looking prices that are 95 cents or whole dollars or something like that, it doesn't really matter, then you can use the price scale update wizard for that purpose. Special prices can be also maintained via export import. They are fairly flexible and you can base them upon discount as well. Contract prices can also be maintained via export and import. They can be discount based. They can also be a premium. So you can say, okay, this I'm going to assign a contract to this customer who's a bit of a pain in the derriere, and they're going to be paying more than everyone else. So you can actually implement a premium. So if a contract exists, it will be used as the primary source of the price, even if that price is greater than other prices within the system that would otherwise be available if that contract didn't exist. And you can use a price scale override for certain products as well. There's a lot of flexibility that you can use with contracts, and you can, as we said previously, prioritize the special price. You can also have markup-based prices, which allow you to maintain your prices within certain margin ranges. And you also have individual controls on those items as well to basically say, I want to never enforce a margin, then why bother setting up the margin controls in the first place? Or you can warn only security enforce. So there's a security right that allows, say, a manager may be able to sell something outside of the bounds of the margin, but if someone else tries to do it, they won't be able to do it. And then there's always enforce, which clips the wing of the manager as well. They're not able to sell something outside of your margin constraints. And then, as mentioned previously, you also have template-based pricing as well. So if you're using sales templates and you're saying, okay, we want to always use template prices, they will, as the sign suggests, always use those template prices. So there we go. We've got about 20 seconds left in the hour, so we've done quite well to hit that hour. There's a lot of that we've covered. It has been fairly high level. Hopefully you've got a lot that you can go and revisit within your own organization. If you want to test your knowledge, there is a test. Again, you're going to get a copy of these slides, so don't bother writing that link down. You'll be able to click on it when you get a copy. If you do have questions, use our web contact form. Again, we're software developers, we're not your accounting advisors, so don't ask us questions that should be going to your accountants. Don't ask us tax questions and things like that. But yeah, we may redirect you to your business partners if it's a fairly technical question as well. So, so again, use our web contact form if you do have some questions. And our next webinar, this is an Australian only one and payroll only for a payday superannuation update. So that will be on the 7th of November. I think the invitations have gone out. Apologies if that's not relevant to you, if you're in a different country or you're not part of the payroll function within your organization, but we just wanted to give you a heads up of our next webinar. So thank you again for your time. And with that, we'll leave you to the rest of your day. Thank you.